Welcome everybody to another edition of Let's Do Lunch. Today is Thursday, which is our RightsTech Roundtable day, and I will be introducing our session in just a moment. My name is Ned Sherman. I'm a partner at Manat, Phelps & Phillips. I head our digital and technology transactions unit, and I'm also co-founder of Digital Media Wire, the producer of Digital Entertainment World, and Let's Do Lunch. Let me invite everybody here to introduce yourselves. So please go to the chat. It's right on the bottom nav, and select everyone from the drop down and let us know who's here. Love to see some posts. And if you have questions throughout the panel today for the speakers, please put those in the Q&A area just to the left of the chat on the bottom nav. As I mentioned, RightsTech Roundtable is our Thursday event, and the RightsTech project is a venture between Digital Media Wire and Concurrent Media Strategies, which is run by our moderator today, Paul Sweeting. Paul, welcome to the show. Oh, you're on mute. All right.
I think by this time I would have learned not to keep myself on mute. Thanks, Ned. Thanks for the intro. And hello, everyone. Welcome to season 3 of the RightsTech Roundtable here at Let's Do Lunch. As Ned mentioned, I'm Paul Sweeting. I'm the founder and principal of Concurrent Media and co-chair with Ned of the RightsTech project. And I'm glad you could all join us here today. I'd like to extend, special thoughts to anyone out there who has friends or loved ones in Ukraine right now. It's obviously a terrible situation. But closer to home, the news this week to me was that the video game industry continues to eat everything in its path. In just the last week, we saw, of course, Epic Games, the publishers of the hugely popular Fortnite game, online game, has acquired Bandcamp. They've been a little bit vague about what exactly they plan to do with it, but at a minimum, it seems to me that it's an arrangement that could lay a pathway for independent music artists who are on Bandcamp or using Bandcamp into the video game space and into the metaverse space where Epic is a very prominent player using its Fortnite platform. We also saw Netflix acquire Next Games, which is a Finnish company that develops mobile games. It struck me, it's not a great insight, but obviously as the video streaming business has become more competitive and new subscriptions are sort of plateauing. Netflix obviously seems to think that it needs to expand into or begin expanding, diversifying into adjacent verticals such as games, and it's a logical move. And I would not be surprised to see games become the next big battlefield in the streaming wars, as everyone is competing to both attract new subscribers and hold on to the ones they have in order to reduce churn and perhaps get into different segments of the audience. We also saw, I guess, a week or so ago, yet another Warner Music Group made an investment or a deal with Splinterlands, which is a developer of blockchain games. So obviously, the music and video companies see opportunity in the video game world, and I think they're probably right about that. On the other hand, there is there is in my mind a question about making sure you don't get swallowed up by the video game industry, which is much larger than the music and movie industries combined. It's an immense worldwide business, and the major players in it, the major game companies, have enormous resources. They have access to an enormous audience, and one that is much larger than the music and video streaming audience. And the music and video, music, movies, television industries are becoming ever more dependent on technology that has emerged from the video game world. In particular, things like game engines, such as Epic's Unreal Engine, the Roblox game engine, that are being used to support virtual production of movies and television, virtual live performances in the music industry. And that's all, that key technology is all controlled by, at the moment, all controlled by game industries. It also, I believe, the video game platforms like Roblox, like Fortnite, and Minecraft, the Microsoft game, they're going to be the initial platforms where the metaverse happens. A lot of people talk about Web3 and the metaverse and blockchain, but we're still a long way off before we have a blockchain infrastructure that could support any sort of scalable activity on the in the metaverse realm. So that business is going to grow up, at least in the out of the video game world, and that's where music companies and everybody else is going to have to play. With that, speaking of deals, we have today, very happy to ask Alaister Moughan to join us. Alaister is the founder and head of Moughan Music, which provides expertise on the valuation of music catalog sales. He's been around the business for a while. He was at 23 Capital, which was in the same, or at least his part of it was in the same line of work when that company was still operating. He's worked on both the buy and the sell side of deals, advising artists, songwriters, as well as acquirers of catalogs. He has worked at In Grooves Music Publishing before that, and Universal Music International. He has an academic background in law, economics, and business. So he's a triple threat, and I'm pleased to have Alaister here. Alaister, welcome.
Thanks so much, Paul.
So, music catalog deals. There was some thought, at least here in the US, that things might slow down a little bit after the frenzy at the end of 2021, with a lot of sellers trying to get in under the tax deadline. But that doesn't seem to be the case. We just saw the Neil Diamond catalog sell. I mean, there's been really no slowdown in the deals that we're seeing. What is your read on the level of activity right now?
Yeah, I think that people were sort of suspecting that there could be a slowdown, but there's just simply on the demand side, there is just so many new buyers entering the stage with sort of committed funds to spend. And, I think there was a sort of a delay from the raising of money to needing to deploy that. So there just is so much demand out there, sort of combined with, I guess, that tax issue seemingly being extended. I also think that just the number of high profile deals has just sort of brought more and more artists sort of to consider that option as well. And I think sort of publicity brings a lot more attention to artists sort of considering that. So yeah, it's sort of been, I think, just a combination of those factors, and I guess a lot of confidence in the space, which is sort of continuing post-COVID.
And it seems that, of course, it's the big deals, the Bruce Springsteen deal, the Bob Dylan deal, the Neil Diamond deal that get the big headlines. But it seems to be trickling down to, I don't want to say a lower level of artists. They're all great artists, but less big selling artists are now finding buyers for at least some or all of their catalogs. We were discussing this just before we went on the air here. You're also seeing, film music composer catalogs selling. So it sounds like buyers or prospective buyers are casting a pretty wide net these days.
I think so, and I think the market for high-end evergreen copyrights is just so competitive now that people are looking for sort of alternatives and have really different strategies. So there's people looking at maybe catalogs that are a little more younger in age than they would have before, because maybe they don't want to sort of play in that price point, but also they might be more comfortable given that with sort of streaming, there is a lot more real-time data. Maybe there's a sense they can get more comfortable with those titles quicker, and there just is such a variety of appetite out there, whether that's sort of people like Primary Wave who are more, really focused on legacy and dealing with those types of artists and almost a management role of being part of that legacy. And then you've got people like Hypnosis who are more focused on the song, and you've got a lot of funds that don't want to be a music company. They just want to buy exposure. They just want to buy, producer royalties or sound exchange or artist royalties was never, 3 years ago, something which was the top of anyone's list. But now there's funds who just want to buy that. And that sort of, really opened up a really wide variety of sort of opportunities to the owners of those rights.
And it's really moving sort of forward in time too, isn't it? You see more sort of front list catalogs being purchased by active songwriters. And when it first started out, it was mostly legacy artists whose content had a long track record. But now you're seeing more current artists and more current repertoire being purchased.
Definitely, and I think that goes to sort of that diversity, but also I think just the nature of streaming, where it's over the last 3 or 4 years, that growth has really proven itself as being there. But now it's got people thinking, well, what do the next 20 years look like? What type of catalog are people listening to? I know there's a lot of stats around the percentage of catalog being listened to, but I think if you sort of dig deeper into that, it's really there's so much data out there, and there's a lot of opinions about, well, what's the next evergreen for the next generation, and is it going to be Bob Dylan, or is it going to be someone more contemporary? And if you sort of combine that with thinking about different demographics and different sort of territories where there's streaming growth, there's a lot of sort of theses you can hold, rather than just the sort of traditional evergreen copyrights or always evergreen copyrights. And I think that sort of has shifted that focus towards those more frontless catalogs being put a lot more value on, and not being as heavily maybe seen as risky or as discounted as they were sort of before.
So let's get into the nitty gritty a little bit. Describe for me, if you could, briefly, in 5 minutes or less, what is the basic process you go through in valuing a catalog?
A lot of royalty statements, but I won't bore with the details. But what I would say is that the aggregation process is just getting a sense of what the regular income from the royalties for an artist is actually something which is not routinely done, because an artist is going to be more worried about their advance or their video budget and sort of what cash is coming in from their label, from their publisher, not necessarily how is my royalties growing yearly for the past 3 to 4 years. So a big part of it is, aggregating all those different sources and getting a sort of a good data set to work with, where there's different sources aligned with dates and titles and types, etc. And I say that because just from my perspective, getting a view of the quality of earnings and analyzing what's happened in the past 3 to 5 years is so crucial to informing the forecast you do in the model. And I guess, technically you're looking to do a discounted cash flow for the next sort of 10 to 15 years and applying a multiple at the end of that and applying a discount rate. And there is, I think, a lot of that forecast is informed by the historicals, particularly if it's a newer catalog, but even with older catalogs, of getting a sense of how is this catalog trending? Is there any irregular items in there, or is any sort of irregular activity in the artist's career themselves? Like, were they, a big touring act? Could that change your numbers, and what does that look like going forward? So I think that a big part of it is that historical analysis of trying to sort of get a sense of what the normalized earnings are, so that sort of informs how you can put that into the future. And the discounted cash flow method is the sort of definite method that people are using. And I guess a multiple is always useful as a comparison and maybe as a sense check, but more and more.
It's interesting. When these deals get reported in the press, they always talk about the multiple. It's not clear what multiple they're actually referring to. Is it, last year? Is it a 3-year average? Is it a 5-year average? Is it gross royalty earnings, or is it, something else? But when you talk to people who are actually doing these deals, they're looking at discounted cash flow, not simply a multiple calculus.
Exactly. And it's obviously very hard to get a really comparable multiple given those factors, but it's also just so hard to compare one catalog to the other because of the sort of the nuances of each catalog and what type of rights it is, what kind of deal they have, how does their last 3 to 5 years look. And the more you get into it, the more difficult that is. And I think, historically, when there was, I guess, the trades were likely quite similar, that might have been more useful, but it's sort of becoming more and more a good number to report and a good number to feel good about if it's high and you got that number, but it's not usually terribly insightful for applying it to your own or to a specific catalog itself.
And is it getting harder as you sort of move toward more current, more front list content where you don't have, maybe you don't have a 5-year track record to derive an average from for your cash flow analysis?
I think it's it's definitely becoming harder. I think it's becoming a lot more bespoke as well, of trying to what is sort of interesting is that it's kind of a mix of trying to get some historical data to sort of apply a decay, but also what is sort of interesting about the last sort of 5 or 6 years is that if you're sort of applying the decay of how a song released in 2013 performed over time, the market in 2013 just looks so different. There were downloads, there's physical sales. It's just sort of a very difficult thing to compare. So I think that more and more people are looking at sort of close to the real-time data and also sort of whether they can sort of align themselves with that artist, or whether there's something they can sort of play an active role in their career and sort of help that sort of continued relevance of the work. So I think it is definitely becoming more difficult, but I guess there's also a lot more data out there, and as people sort of getting a lot more, each deal sort of having a very sort of focus on what sort of the next 5 years looks like.
There's also been something of a shift in who the buyers are. I mean, it started out, it was Merck. Then you got Josh Gruss at Roundhill and a few others who came out of the music industry by and large. You now see KKR, Apollo Global Capital, big private equity in financial investors. Has that changed the calculus at all? I mean, are they doing the math differently than the first wave of buyers were doing it, or is it essentially the same?
I think that it's sort of essentially the same. It's sort of quite similar, but I think there's just a lot more detail, and I guess maybe a lot less qualitative judgment. So things like does this song have does this catalog have a song that's really great to sync? Those sort of considerations, which someone like Merck or someone like Josh, who's really engaged in the music, that's something that sort of naturally, when you see the song titles, that's what you're thinking, not what is a sort of regressive decay for the past 3 to 5 years. So I think that the process is similar, but there is a lot more different stages of approval, a lot more people asking questions, asking for sort of backup data. So a lot of those qualitative judgments, I guess, have to be borne out with sort of almost proof at times, or sort of different scenarios. But before, I think it was, more of a music people making those decisions within a music company. And I have seen sort of a lot more rigorous approach, and I guess a lot more sort of levels of approval in a sort of financial institution to get these through. Sort of speaking as someone who worked at a debt financing company, sort of, and coming from the music world into finance, I never knew what a credit committee was, but now I'm very much aware what it is and the sort of type of information they like to see, which is can be quite interesting in the different asks. And even for what I do, working on the artist side, it's also interesting to see what questions they ask and how they would look at that as well. So it's kind of a lot more.
Yeah, you anticipated my next question is, have there been changes in how these deals are getting structured? Are artists looking for different things? Are they mostly really just lump sum deals, or are they, is there some sort of payout schedule that is going into these deals? I mean, did somebody sit down and write a $500 million check to Bruce Springsteen? I mean, or is it financed differently?
I think typically it is, from what I've seen, a lump sum deal. I think where there has been more nuances, and what is kind of quite intuitive if you're an artist, if you're someone like Bruce Springsteen or one of these evergreen artists, is why does everyone want to buy my catalog? It kind of makes you think, well, is it going to grow a lot in the future? So I think there is sort of almost upside protection written into the deals, because you sort of do almost get suspicious that there's so many interested parties, and why am I selling this asset? So I think that's one thing which people considering to sell are looking at, and sort of also trying to get a sense of, well, what do they see that I'm kind of missing? And there can be sort of build-ins around that, and also there's always sort of continuing relationship with the artist in terms of maybe sync approval or something like that. So sometimes there's nuances around those, or re-releases and those kind of items. So I'm sure with someone with the sort of back catalog and vault that Bruce Springsteen has, that there must be sort of future components based on reissues, etc. But it's kind of
I can't imagine Bruce or Dylan certainly wants their music being associated in certain sort of contexts that they wouldn't approve of. So they must have some sort of ongoing input into what happens to their catalog.
Yeah, and I think we've seen, recently with Neil Young and the sort of Spotify sort of controversy, how even if a lot of times, the artist might not technically have the rights to do something, it kind of doesn't matter when you're the artist.
If you're Neil Young, it doesn't matter, because
exactly,
no label wants to be known as the guy who is the one who gave the finger to Neil Young. I mean, that's not a good look for a label. So
again, there's these sort of relationship issues, which I think you can make a lot of analogies about a music catalog being like any other type of property or any type of asset, but there are these sort of qualitative factors where sometimes it can look very different, and sometimes there's relationships to consider as well, and that makes it both positive and negative, I guess.
So at the top of the show here, I was talking a little bit about what's going on with the game industry and the increasing intersection of the music industry with the game industry. And when this first started out, when catalog sales of this sort first started, the focus was on the streaming platforms. It was what the DSPs were paying out in terms of royalties, and that was the revenue stream people were looking at. But there have been a lot of changes in the music business. You're seeing a lot more music is ending up in a lot more places. There are a lot more, sort of interesting sort of sync opportunities that are emerging. So when you're doing, a discount future cash flow analysis, and you're looking at a decay curve derived from a trailing average, what sort of assumptions do you need to make about where the industry may go to put a price on a catalog?
Yeah, that's quite interesting, because I think what is difficult about those sort of new models is that a lot of the time it takes a while for the licensing to catch up. So for example, like Peloton or TikTok, when from day one they started paying out royalties, it was more of a, well, they haven't been paying out royalties at all, so here's kind of a lump sum, and they're still working out how that works. So it's really difficult, I think, to be that specific about each individual, especially those future methods of licensing. So I think when you're looking at growth rates, I guess you sort of be quite careful about how you group different types of income. And I think there has to be a sort of degree of judgment around the generality of what are you lumping in with streaming, and that, parts of it may go down, but then that's sort of the upside from Facebook, or those sort of considerations where, industry, the Goldman Sachs reporters are very useful benchmark, but maybe you want to sort of use your own judgment on what those numbers do. And also just have a look at the artist profile themselves. I think in particular, this can be very, catalogs can look very different for artists which are very YouTube dominated, and that's sort of quite a different, a different profile at times. So it's trying to, get a sense of the artist profile and where they listen to. And I guess, just always just trying to make a reasonable judgment there. But more and more, it's interesting with these new models, because it does sort of take time for sort of the specifics of how it gets paid out and to get comfortable with that. So I think it always is, maintaining that judgment and seeing how the income's growing overall.
You mentioned the various data streams that you try to gather in the beginning of the process. The industry in some ways is sort of drowning in data right now. I mean, we've never had so much data on the actual consumption of, or the listening of music. I mean, in the past, you bought a CD or an LP if you're as old as me, and you went home, nobody knew how many times I listened to it. And that had no economic relevance to anybody at the beginning of the pipeline. But now, of course, you're directly monetizing consumption thanks to streaming, and the way those deals work, and the way royalties work. And so we've got all this data. What when you sit down to sort of begin the process, what are you looking for in the data? What are the key metrics that you focus on? And are there data points that you wish you could get access to but can't, either because they won't give them to you, or that data isn't being collected? What are the key things you look for in the soup of data that you potentially have access to?
I think mentioning one thing just that has changed, you're sort of mentioning consumption, is I think there's also more and more royalties being paid out closer to the point of consumption, where in the past semi-annual reporting was very common. Now there's a lot more pressure on administrators and distributors to pay out a lot quicker. I say that because I think, traditionally looking at a catalog, it was very difficult to sort of look at your publishing or your PRO statement and say that transaction, which I got paid out in January, that stream or that radio play occurred in October of 2018. Like that sort of pinpoint analysis was just not really a worthwhile exercise, and a lot more difficult. But especially a lot more artists who own their masters and have a distribution deal, the real-time streaming numbers, I think there is a useful comparison that can be made there. But in saying that, I think it's really an issue of materiality. So you're really trying to get a sense of what are the, you're always looking for the sort of the 75 or the 80-20 rule. What are the big titles in the catalog? And that's sort of what you focus on. And that's sort of the really crucial data point as well. What makes up this catalog? What is someone going to look at? What's generating the majority of earnings? And looking at it by type, by territory. So I think it's really trying to focus on the crucial titles in a catalog. And I think one of the sort of logistically more difficult points is then trying to tie that back to release dates, especially on the publishing side. That's not often sort of coinciding, and yeah, getting a lot of metadata at times can be quite a tricky exercise, where if it's a small catalog, it's not much of an issue to have to look on public sources, but on a large scale that can be quite difficult. And I think really being able to get a sense of how the different vintages are performing is what's really important. And although that sounds something quite simple, that can be quite a difficult and sort of time-consuming exercise. So to be honest, most of the data points are coming from the royalty statements themselves, unless you have a really good form of typically a master royalty stream where the sort of consumption mimics the payout quite closely, so you can sort of compare those points.
Just a reminder to folks, if you have questions for Alaister, we'll be taking those in a few minutes. Please put them in the Q&A window, if you would. Are there sort of macroeconomic factors that you think might have some sort of impact on the pace of deals, the deal flow if you were in the music realm, with interest rate changes? I mean, they're obviously going up. People are, certainly, Wall Street or city money. It wasn't particular about what the asset is necessarily. They're concerned about what the return on it is. And could we see money shifting out of this sector as other things happen in the broader financial markets?
Yeah, I think that's definitely a big driving force for what's been happening. I think that there is that delay from sort of the music asset class proving itself and then people getting funding and launching these funds, where a lot of funds announcements recently, there's not really a shortage of new funds being announced. So I think there's sort of a natural extension because of that delay to that interest rate factor of just the time that it takes for these funds to get started and to start deploying in that area. I think that, there's always going to be music companies and, music companies and record labels and publishers are in the copyright business. And I can't see, those companies strategically changing a lot, but yeah, potentially the more sort of financially driven funds, that's sort of definitely an area of focus. But I think there is that natural delay where that seems to be sort of extended. And yeah, I think it'd be interesting to see maybe in 18 months or 12 months how that's sort of working out.
And do you think that those changes could be reflected in prices? I mean, is it going to affect the price of a catalog?
I think, yeah, that's an interesting question. I think in terms of the very premium evergreen catalogs, I think there's always been a pretty big premium on those. And particularly if you're looking at the really big headline deals, there's been a lot of major label acquisitions. And I think the considerations going into why a major label wants to own a catalog can be quite different.
Right.
Sony's been in the Bruce Springsteen business since 1970, and I imagine that always want that affiliation and frankly the market share that might come with that, and many other things, the futures or the re-releases. So I think on that side, that might not change the outlook as much, but for I guess maybe the more mid-market where there are more passive rights, where there's a lot of decisions being made as an alternative part of a investment strategy, that could be where maybe the market could get hit a bit harder.
And I don't want to put you on too much on the spot here, but there are those who say prices are already getting into bubble territory or unrealistic. Do you have a view on whether prices are actually in line with the fundamentals of the market, or are, you know, the deal makers getting ahead of the market?
Yeah, I think one thing which is quite a new thing with catalog analysis in this area, and we're talking about the newer catalogs, is that we often talk about decay, but one thing which I think can really increase the prices, well, when do you start presuming, if you start presuming it grows again, because it's theory with the sort of industry streaming numbers, it's quite often that you can sort of just put it straight in and apply growth after a certain period. Then you look in 10 years and now that song, which was the #1 song in 2018, is earning more in 2030 than it did when it was the biggest song in the world. So I think in particular around sort of newer content and the streaming assumptions, that's something which is requires a lot of judgment. I think in terms of the really big catalogs, as you sort of mentioned, there's a lot of management that's gone into it, a lot of sort of future plans or how they're going to continue to make that artist relevant. And as someone sort of who's worked in the music industry and is interested in the industry, I guess you have that confidence when you have control. But I think it's maybe the more passive rights where you're purely relying on what you think the market's going to do, is that it's perhaps there's sort of been some pretty bold assumptions, but then again, there's also, you know, the numbers keep on looking good year on year for the streaming growth. So it's it's sort of yet to prove itself.
It was interesting. I saw that the Dylan catalog, Universal is now, was it Universal bought it? Yeah, I guess.
Yeah.
You know, there's some sort of NFT spin-off from that catalog, and you know, that's not a straight streaming exploitation. That's something else. It's not clear to me exactly what they're going to do in that area, but you know, that's a case where changes in the market could change your assumptions about the value of the copyright that they're, you know, or at least potentially accretive new opportunities to exploit those rights.
And I think that sometimes, especially in terms of, you know, using analytics to silence us or project forwards, like a lot of data can be a dangerous thing at times. So yeah, it's
paralysis by analysis, right?
Exactly. Yeah.
So do you see the industry changing in response to what's going on in the financialization of rights? I mean, is it going to change things operationally within the industry? Or, you know, are the, especially the big labels that also own big publishers, you know, is this changing their calculus about where to put their capital, and you know, is that going to drive sort of meaningful operational changes in the industry?
Yeah, I think that's an interesting question. I think one thing which is sort of being talked about a bit more of the industry in general is, it seems like artists and songwriters are a lot more aware of what they want out of a deal, and that sort of frontline deals are changing because the long-term impacts of the type of deal you sign is becoming a lot more obvious and now has like a money value attached. So I feel like it is an interesting consideration for the frontline part of these music businesses, where it seems like from what I can see that sort of artist teams are coming to those conversations loaded with a lot more analysis than maybe previously. And I think that's sort of an interesting point of you know, broadly, what does a label do and sort of how they work with the management team and what's their role, because I think that the realities and the economics of the industry and sort of streaming is sort of really just frontline news and sort of the front of everyone's mind when you're signing a deal now, that I think those sort of there's a lot more, I'd imagine, a lot more complexity and a lot more sort of analysis being done by both sides in terms of, well, was it worth investing in artists for that? So I think that it's, I guess, causing a lot more consideration of those initial deals.
Yeah, I would think at a minimum, it's sort of redefining the role of a manager for an artist.
Exactly, yeah.
They've got a lot more sort of data-driven analysis that they need to do than perhaps they've had to do in the past. So it's sort of a new role for them, a more it's potentially a more valuable role to the artists. I mean, they're going to need a lot more advising, it would seem to me, as those calculations get more complex. We did have a question from Charles Diatri. Given that Epic's grand game is battle with Apple, of course, yeah, and Steam and Google, is there any part of this purchase, I guess you mean the purchase of Bandcamp, about denying a controlled marketplace? 30% of Epic's sales is a big incentive. Yeah, I mean, that's sort of slightly different from what we've been discussing, but yeah, I've seen some speculation that the sort of underlying strategic motivation for that deal is to sort of stick a little thorn in the side of Apple by Epic developing their own music play, if you want to talk about it that way, and maybe Epic gets into the music streaming business in some fashion. I don't have any way of knowing whether that's actually part of Epic's thinking here, but that idea has certainly been being thrown around out there, that this is at least partly a hedge against the hegemony of Apple over the iOS system, and that 30% vig that they take from all sales over the platform, and of course the ongoing litigation. So if anybody else had a question, please pop it into the Q&A now. And Alaister, did you have any some final thoughts? Anything that I didn't touch on that you think bears saying?
Yeah, I guess the Bandcamp news took me by surprise as well. It's always sort of been spoken of as almost an alternative to the conventional everything we're speaking about today. So we were speaking about these sort of interesting music catalogs, but I think more broadly, music service companies are seeing a big, as the sort of music asset class gets more expensive, people looking at different options. And I think that's a really interesting and sort of surprising one. And I think, yeah, on the music creator side as well, there's a lot of activity that sort of a lot of these financial institutions that were looking at music catalogs are now looking more broadly at those aspects as well. So it's it's an interesting new world.
So Charles chimes in again. Apparently I misinterpreted his question. He was really asking whether you think the Bandcamp architecture scales for game distribution. And I've seen that question posed before as well. And I don't really have any insight into that people who follow that business more closely than me wouldn't be better sources for. Although I will say, I don't know that Epic needs the capacity to scale game distribution. I mean, its platform is already quite large. I mean, Fortnite is a huge platform, and their own infrastructure is probably capable of distribution of games. And they're a major player in the game, and there's a major trend in that industry toward more of a cloud-based operational paradigm as you get into more subscription models around games, more of a sort of Netflix of games kind of model, which is probably why Netflix is trying to get into the business as well. So I don't know that Epic necessarily needs help in the realm of scaling. But I could be wrong about that. I'm not an engineer. I don't really understand the intricacies of streaming architecture. So I guess we're out of time. This was really interesting. I thank you for your insights here, Alaister. Somebody in the chat said you asked all the good questions, so they don't have any questions to add of their own. But this was fascinating. I mean, it's such a fascinating time in the business, and this is just great stuff to watch, and you're lucky enough to be part of it. So that's it. Ned, are you still there? I don't know if Ned is there.
I'm here, and I agree, Paul. You asked some great questions, and Alaister really enjoyed the conversation. Learned a lot today, so appreciate it. And thanks to the audience for your active participation, and we'll see everybody at the next one. Have a great day, everybody.
Thanks, guys.
Bye-bye.